Hey everyone, I'm Desiree Tyree. I'm a CPA and accounting strategist for gym owners. Thank you for joining me today. Today we're going to be talking about what's not deductible because it's easy to talk about what is deductible, which is like basically everything that you need for your business, right? All ordinary necessary business expenses are deductible. So it's easier for me to say what's not deductible so people know going forward and how to move. And maybe they'll just manage their expenses a little better knowing that some of these expenses aren't deductible. And they won't be surprised come tax time when they can't deduct these expenses. So most taxpayers fall into either one of these categories. They are either catch me if you can, or I don't want to smoke. They're afraid of the IRS, or they're like, I'll take my chances. So if you don't know, this is Leonardo DiCaprio from the movie Catch Me If You Can, and this is the guy from Hot Ones. I don't know his name. But most taxpayers fall into either of these categories. So this information is so you can, if you are like Catch Me If You Can, at least you'll know what to look out for and what to expect if this does catch up with you. And if you're I don't want to smoke, well, now you will know what deductions that you need to be aware of so that you're not overspending in these categories because you can't deduct a lot of this stuff. So here's a list of some non-deductible expenses. We have personal expenses, fines and penalties, lobbying expenses, political contributions, capital improvements, life insurance premiums, club dues and membership fees, certain meal and entertainment expenses, gifts to clients and employees, improvements to real and tangible personal property, demolition expenses, clothes, distributions, and commuting costs. So I'm going to go into a little more detail for some of these. However, off the top, fines and penalties are never deductible. This could be OSHA fines, parking fines, any tickets you get from a governmental entity, those aren't deductible. So sometimes you see on your profit and loss where your accountant or book preparer has made a separate category for fines and penalties. And just know that when you get those, when you have that line item, it's usually not going to be deducted on your tax return. Lobbying expenses are never deductible. Political contributions are never deductible. Life insurance premiums, there's a little bit, let me just get a little more specific about this. These are premiums paid for life insurance policies where the business is the beneficiary. Club dues and membership fees, these are not deductible if they're for like a country club or a social club. Now, if you have club dues and membership fees for a business organization that you're a member of that is relevant to the line of work you're doing, then those membership fees and club dues are deductible, but country clubs, social clubs, those aren't deductible. And distributions are payouts to owners, and they're not salary distributions. These are when you are like a LLC owner, single member LLC, or a multi-member LLC, and you take your distributions after profit. Those aren't deductible. And commuting costs, you can't get a deduction for driving to and from work, just as anyone else cannot take this deduction for driving to a regular job. If I worked at Amazon or if I worked at McDonald's, I can't take a deduction for my mileage for driving to and from work. Now, some other vehicle expenses, other mileage expenses that you might incur, for example, if you have to go to Walmart to pick up some supplies or something like that, that would be deductible mileage that you can take. So we're going to go into a little more detail. So first, let's go into personal expenses. So as I was saying, some deductions, some of these are not deductible at all, and then some have special rules to them. So personal expenses, these have some little rules to them. You can allocate certain amounts of your personal expenses. And so if you've heard of the home office deduction, that's when you have a dedicated home office in your home. You can deduct the square footage of that. Vehicle expenses, if you are tracking your mileage, you can deduct those business miles. Cell phone and internet, if you have a dedicated business phone, or you can deduct that. or you can allocate a percentage of the usage of the cell phone and internet and other utility bills as well. So if you have a home office, you can deduct or allocate a certain percentage of the power bills and other home expenses. Travel and meals. There might be a business and a personal portion of these expenses, and so you can deduct an allocation for that. Education and training, as I was mentioning earlier, like you can deduct your memberships for some professional organizations that you can be a part of, but you can also deduct continuing education that you need or certifications that you need. That's deductible, and it's sort of like a personal and business thing, but it's you can deduct it as a business thing. And health insurance is another deductible expense for business owners, and there are some rules to this as well. The main thing that you may want to remember is that if you have a spouse or someone who can put you on their insurance, then you can't deduct health insurance. That's the main rule, and there are also some other limitations to deducting health insurance. Another one I wanted to go more into is property improvements. So improvements are usually tacked on to the initial cost of an item. So if you buy some gym equipment and then later on you improve it, then usually those improvements must be capitalized as well as when you bought the equipment, because certain things that you buy over maybe $2,500, you can't take the full deduction in the year that you bought it. And it's similar to improvements. However, you do have the Section 179 and bonus depreciation allowances that the IRS gives you where you can deduct some of these improvements, not all of them, but some of these improvements can be deducted in full in the year that you purchased them through Section 179 and bonus depreciation. Some examples of improvements are adding a new roof to a building, installing an HVAC system, building an addition to increase the square footage of your property, and rewiring and replumbing a building. So usually these will be depreciated, and you can get that deduction over the next few years, however long that improvement is expected to last, or in certain cases, you may have to add it to the whole useful life of the property. Meals and entertainment. Meals are only deductible up to 50%. Now, in 2021, 2022, while we were in the height of COVID, they were allowing business owners to deduct 100% of business meals. However, that's changed 2023. So starting in 2023, it went back to 50%. And this is one of those IRS things that they change from time to time. So one year, depending on what we're going through, they may go back to 100%. But right now it is 50% of business meals. So this is one I really see a lot of businesses get carried away with, is putting all of these business meals on their profit and loss. And I don't know if they all know that you can only deduct 50% of those. Another one is entertainment expenses. This used to be deductible, sort of like meals and entertainment. When that TCJA Act was put in place in 2017, it eliminated that deduction. So now entertainment expenses are generally not deductible unless they are directly related to business. Some exceptions to that are like holiday parties or summer picnic for your employees, expenses for attending business meetings and conventions, and entertainment that is sold to customers. So if you were selling tickets as part of a event that you were holding and you sold this to customers, or if you had to buy things related to providing that entertainment, then those expenses are deductible. Next, we have gifts to clients and employees. Business gifts to your clients are deductible only up to $25 per person per year. This is one I see gets abused a lot too, because unless you have someone going in your books and getting these details, a lot of this will be overlooked. But just so you know, business gifts are deductible only up to $25 per person per year. Employees is another one that I see get abused a lot. They are fully deductible if they are like really small things, like you probably providing coffee and small snacks to your staff. That's fully deductible. Achievement awards, when someone has worked there for a year or two, or if they have maybe had a baby. I don't know if that's achievement, but stuff like that. Achievement awards up to $400 or $1,600. These are deductible, and there are some rules that you have to follow for that to be deductible. And the important thing to note for gifts to employees are that they can't be cash. Cash and gift cards are considered taxable income, so you would have to add this to the income for the employees so that they have payroll taxes and all that good stuff taken out of it. Other non-deductible gifts to employees are those that are very expensive. So we have this limit here of $400 to $1,600 for achievement awards. And then we have the smaller frequent gifts. Anything out of that area would be like an expensive gift, and that is not deductible. Last, let's talk about clothes. I hear this one a lot. You can just slap your logo on anything and then you can say that's a business deduction, which, hey, that's not a bad idea. You want to advertise your business. But let's just make a few notes about it. You can't deduct, for one, you can't deduct regular clothes you can wear outside of work. I see this one a lot is when people are saying I have to go to an event for business, so I had to buy these clothes. However, if you can wear these clothes anywhere else, if you can wear them to the movies or anywhere else, if you're gonna wear them after that event and they don't have your logo on them, then you can't deduct that. Branded clothes, the ones with your logo on them, are deductible, but the logo has to be prominent. You can't get a deduction for putting your logo on clothes and it's really small. It's like right in the lapel of your collar or something. And it's so small that you can just still wear that out and it not be a big deal. Like if this is something that you can still wear to Walmart or something like that, and nobody will notice, then it's probably not going to be considered deductible by the IRS. I think that covers all of the deductions. Let's go here again. Yeah, I think that was it. Let me check to see if there are any questions, and there are none. So I'm just going to wrap this up. I really appreciate you for sticking around and watching this with me. Hope you enjoy the rest of your Friday, and I will catch you next time. Thank you.